Hello, this is Ahura, and we'll be with you with the markets update at the middle of the week. Today is Wednesday, September 24, 2025. We're going to check the market so far, what's happened generally till today and what's going on right now in the market, especially after yesterday's Mr. Trump and Mr. Powell's speeches and the market reaction and other central bankers the speeches, while we know that the United Nations meetings is still going on, and also which can increase the geopolitical tension, and also we have too many, there's like plenty of the economic data published and publishing this week. Just like to look at the market, I have to mention that now, based after yesterday's Mr. Powell's speech, the chance for 25 basis point rate cut for October meeting increased to more than 94%. That's unbelievable. I can't understand and I can't imagine, but that's what we can see here. That it was more than less than 90%, it was 86, 87% a few days again, it's increased. But it can be more interesting if you look at the December expectations. In December expectations, now there is something interesting here. Now we have a more than 1% chance for 25 basis point rate hike and not the rate cut. That we wouldn't, I mean, it was here like months ago, more than a month ago, but it disappeared in after the dot plots and after the Fed members' speeches. Again, we can see that coming here. That shows another, if you remember, we're talking about this, the market risk and uncertainty after Fed Chair Powell's speeches, while we had the dot plots in one hand and expectations and Mr. Powell's speeches in other hand. The same thing that we saw yesterday in Mr. Powell's speech, focusing more on the labor market and economic growth while the inflation expectations increasing. That can say that the market is understanding more and more that Fed is not clear about what exactly it wants, as they say that the market uncertainty increase and they have chance for different things that could happen around. Anyway, now that's the condition, and that's what we can see here, like 22% chance for holding the current, holding the just like October rate at 30, between 3.70 and 4%. And also there is after that they cut the rates, and also there's another like around 77% chance for another rate cut, or the third rate cut of 2025. As the market reaction now, it's just like if looking at the charts, what's interesting here on the bond yields, you can see that the 10 years bond yields in the United States before the meeting at the beginning of September, it was 4.26%. Getting closer to the Fed meeting, it fell towards 4 point, just like here we go. Yeah, it fell under like 4.30%, like no 4 point, sorry, it's 4.035%, not the 30%, 35 thousandths of 4.035%. Like saying that these numbers can be a little bit confusing. Okay, yeah, but then the thing is that then after Fed meeting, when the markets understand no, it's not what they can. With this big disagreements about the economic expectations and inflation expectations, again, this percentage started to increase, and now we can see that the 10 years bond yields increasing towards 4.2%. So that's what happened mostly in the bond markets. Same trend almost repeated in Germany. Same trend we can see in Italy, in Spain. Same thing in United Kingdom, and also the same in Japanese stock markets or bond markets. These data confirming generally that right now the market risk again increasing. If looking when we are talking about the market risk, let's check the VIX chart. The VIX chart, which it was around 70 before Fed meeting, it fell around, it was around under 15 before Fed meeting, increased above 18 like the day before Fed meeting. And after Federal Reserve meeting, while the market expecting this uncertainty to slow down again towards 15, 16, that increased after short correction, it increased again above 18, and now it's at 18.15. So that means that the market condition is risky right now, and the market doesn't generally believe what the Fed member says. It won't mostly believe on what it can see here. I mean, the market participants, they say that we believe on what we see and not what we hear from the policymakers. This is what we can understand from the chart's reactions. As the market reaction, dollar index 97.45, it's increasing right after the Fed meeting when it fell under 96. I told you that we were talking about that on a live analysis. We told that we are expecting to see again the dollar index above 97. That's what's going to happen, especially till Friday's PC and core PC price index data. And then after that, we can see and talk about the upcoming movement. But for now, until the Friday's data, we can expect the dollar index between 97 and 98. Same thing is happening in the gold chart. While the dollar index increasing, you should expect that gold to fall, but the market demand is increasing. Fundamentally, gold gets much more support, and now that's what we can see here in the chart. Generally, the gold is still in the demand, even though the short-term correction if happens, but still the general trend is a positive. As for the other market and the energy market, oil, as a reaction to the geopolitical tensions and Mr. Trump's speech, that in the Mr. Trump speech, Mr. Trump mentioned about talk about the Europeans, that why you're buying still the Russian oil and you're helping the Russian war machine with giving them the money. I mean, directly supporting the Russian war machine against your ounce. I mean, yourself. While you're funding the war against yourself. That's increased the market reactions, market risk in the market. That what's going to happen if the Russians oil's getting limited in Europe. While that the tensions between Western countries, Westerns against Islamic Republic in Iran, also this tensions also increasing, which can just like very limited the Iranian oil export as well, and around 2 million barrels right now they are selling. And if that's been blocked, then we can see the less production or less output in the market. That always data together, they are supporting the idea of slightly higher inflation in energy prices, but it's not going to be long too much as the market demand is not so high. On the stock markets, as you can see here, and we talk with the data that we have, with the uncertainty in the market, data says that the inflation still can be higher for longer. All these things together, just like putting these numbers into this data together, looking at the technical chart also, we can say that now it's time. Sounds like now it's time for the correction, and the price is going to slow down. Don't forget that in 2 or 3 weeks also we're going to have the earnings reports. Big investors probably they know what's going on in earnings reports. Probably we can start seeing more sales in the stock markets by the big sellers. By big market players. Same thing we can see in the Dow Jones and the Nasdaq charts. Generally about the stock markets, we are the same as on the cryptocurrency market. The Bitcoin somehow following the stock prices, but at the same time, with uncertainty going on in the stock markets, and the money is getting out of the markets, they are looking for the new places where to go. The crypto is one of them. So that's increasing the demand for the Bitcoin and other cryptocurrencies, and that can hold them higher, and support them to hold the higher rates for longer. That's what we can see here in the chart, in the cryptocurrency, especially on the Bitcoin chart. For now, we are still positive, unless if the Bitcoin price fall under 111 and then 109,000. Yeah, that's what's happening in the market, and just like short market recap. About the economic data, oh yeah, like I forgot to say, no, I didn't forget to say, I just wanted to keep them just like economic calendar at the end to see so by that we can have the probably the US housing market data as well. As you can see here, that week started with the Chinese interest rate decision and monetary policy meeting, where the PBOC held the rates for 1 and 5 years loan prime rates at 3 and 3.50% unchanged. Later in Canada, we had the inflation data, industrial producer price index, producer price increased slightly, more than expectations, but slightly less than previous month on the monthly scale, but on the annual scale, IPP or industrial producer price index increased by 4%. Generally, the market shows that the inflation slightly increased in Canada, while looking at the other markets, especially on a Tuesday, PMIs that yesterday was the market focus where we saw that, especially in the European economy, just like PMI numbers, they were really showing that the markets also slowing down, the market economic activities in Eurozone slowing down. Same thing that happened in the UK with the both manufacturing and the composite manufacturing and service sector slowing down, while in the United States also, even thought the condition and the situation is much better than Europe, but still PMIs lowered compared to previous month and showing that okay, we need probably more supportive economies. That was one of the reasons that supported just like the idea of the rates cut last night. But generally, the market is not that bad. Yeah, last night we had also the API reports, American Petroleum reports. Also, we saw that the just like inventories fell by around 4 millions, 3 million and 820,000 barrels for the weekend that's September 20, and that's expected to be seen almost the same to like more than 20 millions drop in the inventories for the same period. In the official numbers, which we are going to have in a few in about an hour. In Japan, also, we saw that the same trend continued. The manufacturing and service sector both lowered, while in Turkey, capacity utilization slightly eased, but in the United States, with falling slower, I mean, with slowing down the NBA 30-year mortgage rate from 6.39 to 6.34, we saw that activities generally increased in US housing market, and also just like housing dipped. As for the other markets, just like generally we can, as you can see here, we can just like building permits increased with more than expected, but compared with the previous month, building permits slightly eased. As for the housing market, we're gonna have it in a few minutes. We are expecting to see slightly less housing sales, and about the oil price also. So the new home sales should increase, but less than expectation, maybe slightly more than expectations. But comparing with the previous month, we can see the lower overall demand in the new housing in the new housing sales. That's what's happened generally during the week so far and what we had. Hope it was useful for you. If you had any other questions, don't forget to write in the comment section. We'll try to get back to you as soon as we can. Have a good time. Bye-bye.